All right, so today we're going to be talking about how to trade multi-day runners in the small cap market. So this is going to be mainly focused around penny stocks, but this does work on kind of mid cap, large cap stocks, not so much, but more mid cap range that have some sort of catalyst. They run for a few days and you're just trying to look for an entry. So this is going to be mainly based around using previous resistance as new support, as all of my trades are. But this is an example on ONCS, where I was able to buy the dip on a morning where it pulled back down, and I got in at about 240s and it ran up to about $3 per share. So very decent trade, nothing too crazy, but some good lessons about how to kind of plan these trades and stay patient for buying the dip, because buying the dip, at least for me, is what works in the market. So I want to share with you my insights and my strategy of how I do so. So with that being said, if you enjoy this lesson, leave a comment down below if you have any questions and hit the like button for the YouTube algo, right? Let's get right into it. So this was a big gap up yesterday. And this is something I've said in the past. We're like, whenever we're trading these stocks, you don't always have to trade them on day one. Usually, especially for me in this current market, I like to just see what stocks are gapping up on day one and then just have alerts to see if they can eventually break out. Because then you could see a breakout and pullback on day 2 or day 3. And those are like the good hourly chart retests. So for ONCS, you can see yesterday, well, technically on Monday, it had this news in after hours, next day gapped up. And it had really good volume yesterday. You can see most of the volume was kind of all congregated around here in this morning spike attempt, where it topped out near like 250s, 260s. That's where most of the volume was. And then just kind of went sideways. I was watching ONCS yesterday for a potential pullback down to this level, down at 182, but that never came close. The lowest one was 190. So not quite close enough for me on that setup. And then, today we saw it gapping up once again, and it was running up, testing 286. So now it is a day 2 candidate for a breakout and retest of the previous day high as new support. So in general, whenever I'm trading a multi-day mover, I usually reference back to the hourly chart. I don't care too much about the 5-minute chart whenever I'm trading multi-day movers. Especially in a case like this, I think this is a really good example where like you could have been a bit too quick and assume that the 5-minute level was holding at 257 and entered a bit too early here. The reason why I don't like this level in the context of this price action is because you can just kind of see most of the trading that happened is like in this box, right? That's where most of the price action happened. This spike here was just like a big kind of just squeeze out. But it's not like a significant barrier to the price. So using that for day 2 didn't really seem like it had great odds. Okay, this is what the hourly chart looks like on Thinkorswim. You can see that overall, yesterday's main resistance was down right near 230s. The exact level, the line chart level, is at 227. And in this specific trade, I chose to enter a bit higher. My entry was actually at 242. So about, 10, 12 cents higher than the actual line chart price. The reason for that is just because, number one, this stock had really good range, so I didn't really want to get the exact price. There's definitely a lower chance to get filled when the stock is very volatile. And number 2, you do have to understand that, that spike up to 260s was only a wick, but that's where most of the volume was. And you can see these 2 wicks here, both topping out near 242, made me just a bit more comfortable with setting my order at 242 and just leaving it at that. If you didn't do that and you just had your order at 229, 227, whatever, and then you see everyone else entering at 240s, if that's what your plan is, you have to kind of stick to it, because you might not be comfortable with the risk of entering a bit higher, right? Because there was totally a chance that this could have held down at 227, right? It could have eventually pulled back down there and then failed. So just because I entered at 240 doesn't really mean it was guaranteed to hold there. That's just kind of where I plan my trade. So from there, it was a pretty standard trade, right? I planned to go long 242. Here, my max loss, initially I planned 194, and then I planned my first target at 289. But when I plugged those numbers into the trade planner, it said that I had to sell my entire size at the first profit. And I didn't really like that because we are seeing a bit more strength in the market, right? With CDIO breaking out and running. I didn't want to sell my entire position. So I modified my max loss to be this level here, right underneath 217. This kind of lower support that you can see in pre-market. So that gave me a bit more size, and then I could not have to lock in as much into the first target. That's kind of like an arbitrary thing, I guess. That's something that I chose to do because I am a bit more of an experienced trader. If you just follow the rules by, the basic, and you plan the trade, long 230s, max loss 194, first target 289, and you had to sell your entire position into this resistance, that's kind of okay. Especially right now, because you can see it's not continuing, right? So selling it all there probably would have been the smarter call, to be honest. But I didn't want to do that, so I modified the entry a bit. But this is once again only failing on the 5-minute chart. Technically, I'm only really concerned about the hourly chart. And as far as the hourly chart looks like it's going to close now, it's just going to be a wick. And if you change this to the line chart, it's not going to be a failed breakout. So I'm just going to default to the basic idea of target or stop, right? I've already locked in my first partial. So from here, as long as it keeps on holding support, I keep holding. Kind of like CDIO, right? CDIO, if you recall, had the same exact thing happen on day one, where it kind of, it bounced off its support, tested resistance, it couldn't break out. If I just reacted to this as it was selling off and stopped out to protect my green, I would have missed out on a $4 per share move, right? I never want to just predict a breakdown just because it fails to break out the first time. As long as it keeps on holding support, I have to stay in the trade. So that's what I'm going to do with ONCS. As long as it can hold support, I'm going to stick with it, and we'll see what happens. That's pretty much the plan there. The main thing that really you have to work with or work on if you are trying to trade stuff like this on ONCS, which I saw some of you did this properly, so good job. But it's always that, fear that traders have of them missing a spike, so they think it's going to sell off, right? There were many spikes today on ONCS where it spiked up a tiny bit and then it fell back down. And you have to really avoid trying to predict. If you know what your plan is, right? Here in this case, I knew my plan was to sell into the 280s. I'm either going to get that price or I'm going to have to stop out of this, right? There is no in between. I can't make that choice of in between. So if a stock starts to bounce and it is finding resistance at VWAP a few times, I'm not going to change my plan and say, okay, you know what? We're seeing resistance at VWAP. I'm going to sell there, because that is fundamentally a change of the plan based on emotions. And that is you trying to predict what the outcome is going to be. When you've entered the trade based on two outcomes and you're making a third outcome, and that's not really based on any strategy. So here in this case, right, ONCS had this spike up to 279, right? Came very close to my first target, only a few cents away. And then it turned around, fell below VWAP and fell all the way back down to 240s. If I chose there to say, you know what, this trade looks weak, I'm going to sell to protect myself, I would have sold for no reason and missed out on the actual trade. Whereas if I just did nothing and stuck to my plan, then I would be in the position that I'm in now, right? So you have to avoid those kind of impulses of protecting yourself or protecting the green, because for the most part, at least from my experience, whenever I try to do that, it's always the wrong choice. The less choices that you have to make in trading, the better you will probably be. And that's very important to understand. So if you want to join us in TradeBuddy, we have a 14-day free trial down below. I do pre-market webinars every single day where I talk about all the stocks I'm watching. I have a full watch list breakdown posted. And I also do trade recap webinars every single day. No other mentor in the space does this many webinars. Trust me, I've checked. And we have a whole community of traders who trade every single day, plus a course, plus so many other tools that will help you succeed as a trader. You can access it right now. Click the first link down below. 14 days, completely free, no strings attached.